Rapapapa, ching, 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 ching. Good morning, good afternoon, good evening, everybody. Welcome to the show you look forward to each and every Thursday and Friday. Today is Thursday, the 5th of February. We are on our 82nd episode of the pre-market show. We have an exciting show for you today. We do have a prize giveaway as well. We're giving away an account for 5,000 buckaroos, courtesy of our great friends at City Traders Imperium. Check out their website. Funding traders and one of the most reputable and trusted prop firms in the world. Before any further ado, let's get over to the show. All right, welcome to the show. Sorry, I finished up a meeting, very important meeting, and that's what caused slight delay today. But we're kicking it. We'll probably be able to give a few extra minutes on the back end as we prepare for the U.S. market. So just a special thank you to everybody who has joined us today. If you are in the live chat and you'd like to ask us any questions, that's one of the advantages of not pre-recording this. So please feel free to type away any questions that you have. We're going to have a look at gold and silver. That's the title of the show. What's next for gold and silver? We'll also have a look at Bitcoin. Bitcoin's been making headlines as well. That's actually the title of tomorrow's show. It's just called Bitcoin. And that's going to be with a good friend of mine, none other than Andrew, the Trader Man Trader. And if you'd like to join us tomorrow, we'll be here same time, same place. Probably jump on a little bit earlier tomorrow in that case. So let's see who we have in the live chat. We have Mir Sabir saying, waiting for Mandela and Andrew. So I'm here with you today. Thank you for kicking it with us today, Mir Sabir. Let me make sure I'm saying that right. Mir Sabir. I like that. I had a friend from high school named Damir, and everybody called him Mir. So yeah, Mir, good to have you with us. And if you'd like to comment, feel free. It helps to bring about a little bit of spontaneity in today's show. So let's kick it off right. We do have quite a few things that we want to cover, but first and foremost, please feel free to enter the prize giveaway. Like we said, it's being provided by City Traders Imperium. There's a link in the live chat. Also, you can scan the QR code at the top left of your screen. What will happen is you'll be entered into the prize giveaway. And once you're entered in the prize giveaway, we'll randomly select one lucky winner who will receive a $5,000, I said that right, $5,000 account. All right, so pre-market show is what it's called. We're gonna have a look at some charts. I think it's only right that we start off with gold and silver because that's the name of the show, right? Let's start off with silver, I guess. Silver had a bit of a tumble this morning. Got a few messages saying silver was down a massive amount in sort of the Asian session. And I know a lot of people have been watching silver and gold since pretty much last week. We got the start of the tumble on last week, Thursday. What we'll do, we'll pop up here. Here we go. So yeah, Thursday, sort of Tokyo, London session. And then Friday is really where we got that big move moving into that London session on Friday. And it's starting to look like it wants to decide where to go next. I think we are watching this silver play out. We don't actually have a silver position as of right now. But if we zoom out, you can see it's come quite a long way in a very, very short period of time. So we're still up massively in the silver metal. If we go back to, here we go. So if we start, let's look at the start of the year, puts us about here. We're still up for the year, and then for the last 2 months, 3 months, we're looking at profits here in silver. I think the key question for us here is, where do we go next after that big move that we saw overnight last night into the early hours of the London session this morning? And so my question is for silver here, can we get back above this sort of 90 level? 90 is our key here. And I know a few people talk about pullbacks, and there's various theories. But if we look at the move from last week Thursday down to the lows that we saw on Monday, we reverse this, we're looking at approximately 50% move would take us to about $96 the ounce. So for the silver traders, I think if we can hold here where the lows have kind of found themselves from late Monday into Tuesday, this $71 is key going into the weekend. And I think on the top end, if we can muster above 90 for silver, I think that's a good sign of strength. So that's kind of where we're focused on, and I think a lot of this is also going to depend on the flows. We don't have a lot of news, a lot of data coming out of the US, and due to the partial government shutdown, the last I heard is that we're not going to be getting the employment data from the BLS because they were shut down partially. So we'll have to keep an eye on that, because it's still a little bit unclear whether or not the data is going to be coming out because of the partial US shutdown. Let's pivot over to the yellow metal, gold here. It's got a few lines in the sand. So we were looking at this 5,000 as a key for gold. If we look at the pullback, there we go. So the pullback that we got was a 21% down move in the span of 8 days, 8 calendar days. That's a pretty big move here. So the volatility is definitely back in the metals. I think from a sort of outlook, forward-looking perspective, what are we preparing for in gold? I'd like to zoom out a little bit more, get more of a holistic view. And I think if we look back here, we did make it back to what would have been the all-time high hit on Monday, the 29th of December. That was an all-time high that was initially a ceiling. And on Monday, we actually bounced off of that. So what we're looking for here is, can we remain above these lows that we saw on Monday? And secondly, do we start to slowly trickle higher back into resuming what was a massive move higher? So I'm looking at this, until proven otherwise, I'm looking at this as a bit of a pause, a little bit of consolidation here. And we want to kind of see how things play out. The volatility is real. I mean, it's a massive move. And I do want to say, sometimes we can forget how fast prices can move, irrespective of your technical analysis, mean reversion, standard deviation. A lot of that stuff can just be disregarded in certain days of panic. And this was a reminder, the moves over gold. This would have been more or less after our last show on Friday. It was a reminder that these markets can surprise, and surprise they have. So that's kind of our outlook. On the downside, I think 4,500 is key. If we can stay above that, that's a good sign that the buyers are still kind of defending this. And then on the upside, it's that around number 5,000. We did get above it yesterday briefly, and we've now retreated back below that. I do think that this was brought about by the announcement of the new Fed chair, Kevin Warsh. I think there was almost like a bid in the market in the anticipation of an announcement being made or a decision being made of a Fed chair. And what ended up happening is, once we got that announcement, it became almost like a de-risking or a certainty that created this vast volatility move, a very fast volatility move, and a lot of money was made on the short side. So I commend anybody who did make any money trading gold and silver over the last week or so. Very well done for that. All right, let's see. We do have Jackie Kumar saying hello. So hello to you, Jackie Kumar. Thank you for joining us today on this Thursday, the 5th of Feb. We also have Khalifa. Khalifa says good. And we have ABK. Hello to ABK as well. Let us know what you're trading today. If you are trading anything, it'd be nice to know what you're looking at. If you're looking at something like gold and silver, or maybe you're looking at something like Bitcoin. Bitcoin is we continue to say this. Bitcoin is not looking good. We said this. We've been saying this for the last month. Bitcoin is not looking great. It's coming back. Well, it's continuing to move lower and lower and lower. It's now below 70K. It's definitely in a downtrend. We've seen messages about various crypto bros and crypto bulls who are a little bit in awe about this move. At the moment, we're not in any trades on crypto, but if we're just looking at it from a purely neutral perspective, I mean, let's go to a naked chart, or at least a cleaner chart, and let's zoom out. Let's see how far we've been. So we were able to hit the all-time high over here in October. And just a reminder for those of you who only trade super duper zoomed in on the microscopic every 10 minutes, every hour. It's nice to kind of take a step back and look at where we were, say, let's say January 2023. Bitcoin was down in the low 30s. And we've seen since the all-time high, October 7th, 2025, it's come down quite sharply. So I would be very careful. I would be very cautious here. These were kind of like the levels that we saw, all-time highs that we would have seen in April 2024. And we're just starting to, if we just compare where we are now to those all-time highs that we saw back or previous all-time highs we saw back in March and April of 2024, we've just about creeped below that. And in order to kind of get a feel for a bounce or a reversal here, we're going to have to see Bitcoin trade better. We look at three main things. First is the positioning, which is the commitment of traders. We look at sentiment. Right now, the sentiment is very bearish. And then we look at the price moves, or price action, or also known as liquidity. The price moves are down and lower, and more lower, and more lower. So if I'm looking at this as a neutral, I would like to see us at least try and defend. I mean, we can probably be a little bit more defensive. Go back to here. Like to see it at least try to bounce here. An attempted bounce would be nice. And a bounce would mean we start to see a little bit of a reversal here, maybe some green shoots, a little bit of some profit taking, maybe. Profit taking from these shorts way up here above 126K. That's kind of what I'm looking for. If the price action doesn't show us that, then we're not touching this with the 10-foot pole. I don't really see any indication of this stopping as of yet. And this is just a reminder, actually, that nothing that we say is financial advice. Remember, you are responsible for your own investing decisions. Please consult your own financial advisor before making any decisions based on topics mentioned in our shows. And that's just a general reminder for you. But as of today, Thursday, 5th of Feb, 2026, we got the New York Open in just over 40 minutes or so. And we're looking at a Bitcoin that is just in a downtrend. If we were to turn this inverse and make it an inverse chart, it would look good, but it's not inverse. This is how it looks, and this is what what we see in front of us. So just to kind of highlight here, if you are trading Bitcoin, number one, take a step back. Try not to only look at it on a minute by minute or day by day basis. And let's see if we can kind of see what would have been. Let's change the color of this. So what we're looking for in Bitcoin here is these all-time highs, which would have been previous all-time highs in 2024, Q2, Q1 2024. If these levels here can, so basically in between this sort of all-time high, previous all-time high, if this can kind of act as some sort of hold here, then maybe there's an opportunity for a little short-term, near-term bounce. If they can't hold, then I think there's no reason for it to continue the trend. The trend is your friend until it ends. So that's my thoughts. Like I said, I don't have any skin in the game at the moment, but I've seen a lot of highs and I've seen a lot of lows. And I think the worst thing you can try and do is try and catch a falling knife as it's actually falling. So that's my thoughts there. All right, so next up, I'm gonna just quickly we'll take a quick short break. We'll be back in about 20 seconds or so with a look at what we're looking at today, preparing for the market open, and then we're gonna give away that account. If you look this way, right up there, right there, that's the QR code. Also in the live chat, there's also a link for a $5,000 account. And all you got to do is click the link, fill out the form, and you'll be entered into the prize draw to win the $5,000 account. We'll be back right after this. All right, we're back now. We're back and we're back in action. So just a reminder, you got about 5 minutes left until we do the giveaway for the prize. And let's see what we got for music here. Okay, that works. All right, so next up, let's get back into the charts that we're looking at today. Before we do that, let's see, we got Mir Sabir saying gold is too volatile. The 1 minute candle is around 100 pips. So how to reduce risk in this condition? So in an answer to your question, Mir Sabir, I think the 1 minute candle is probably going to give you a lot of false signals, a lot of heart palpitations, and a lot of anxiety and stress. So I would suggest maybe zooming out just a smidgen, like we suggested on the Bitcoin, and let's have a look at how has gold performed over the last few days. I think that will help you to take a deep breath and let your analytical mind work fully. So we did touch on gold a few minutes ago. So have a look at that. I think we covered the two levels that we're looking at for gold over the next few days, and I think the main test for me is how do we interact with 5,000 the ounce. That's my question over the near term. Akash says that he's trading. Looks like he's trading gold. Akash, so let us know. Are you trading it today? Are you looking at getting into some positions? Red to green. I like that. Red to green is a good sign. If we go from red to green on a day, that's a sign of the buyers stepping up in what was probably a negative sort of turn to start the day to a positive turn. So that's a very good name. So thank you. Welcome to have you in the office. Red to green. Make sure you punch your punch card so that people know that you're in the office today, and make sure you make it to your desk safely. Akash says, trading futures is tough due to 10 standard lot size. Now I switched to Forex. And then Akash says, taking profit in gold. Red to Green says, how to trade on news event. That's a good question. So if you're trading news events, I think it's very, very difficult, especially if you don't know the full implications of that actual event. There's a variety of events as well. So there are some lower sensitivity or lower volatility events versus a high volatility event, which historically tends to be market moving. And those ones tend to be things like the CPI, which is the consumer price index, which is inflation. The other one is non-farm payrolls, which we're supposed to get tomorrow, but we probably won't because the BLS is shut down due to the partial government shutdown. But non-farm is always the first Friday of the month, and that one is usually market moving, and it always happens 1 hour before the New York Open. So the way I would usually prepare for it is I prefer to kind of sit back, let the news come out, allow the algorithms to do their thing, allow the impulsive reaction to happen, usually a knee-jerk reaction to happen, and then usually calmer minds will enter the market either 15 to 30 minutes after, and then you tend to see what is the lasting trend present itself. So that's kind of my experience has been. It's better to sit back and stay on the sidelines for the first 15 to 30 minutes after a big news announcement, and then you sweep in and pick up the pieces after that. That's my suggestion. Yeah, thank you very much for that question. About trading the news was from Red to Green, how to trade on news event. All right, let's have a look at the S&P 500. Let's pull it up. And right after this, we're going to do the prize giveaway, and then we're going to wrap up the show. Okay, and this is I'm not showing it, am I? Not yet. Okay, so let's go to what we call chatting charts. One of my favorite segments. Always talk about it. So just giving you, I guess, a 3,000 foot view. Like to do that from time to time. So this is where we had the Trump tariff tantrum, and pretty much provided an excellent buying opportunity. This was the first Trump always chickens out, so the first taco, and we've moved up higher. So if you trade NASDAQ, it looks almost identical. This is happens to be the S&P. But that's kind of where we're coming from. And this low was hit back in April of 2025. And it's been pretty much a straight shot all the way to where we are now. Now we're starting to see what I'd like to call a potential stalling here. We're not making any new highs. Interesting to note that the S&P is kind of hitting its head up against 7,000, which is a nice round number. The question next, I think, is if the S&P cannot get above 7,000, what happens? And I think there has been a lot of talk about the breadth. There's been talk about this rebalancing out of what used to be the AI story or the software story into some of the more industrials. Other people talking about the energy names getting some love. I think it's a little bit of all of the above. So if we zoom into S&P a little bit, as we slowly zoom in, we're not on that 1 minute chart like we were saying that the 1 minute chart tends not to be the best arbiter of the best advice. If we look at this, I mean, we're getting what could be a bit of a rounded top here. And so I would be very, 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 very cautious. I've talked about this for the last few weeks, but I'm looking at, this is definitely showing us every time we get some love, we're moving lower. I will say that over the last few days, when we have gone lower, the pattern has been we go lower in the morning on the S&P, the NASDAQ, and then that gets bought midday-ish for New York traders. So if we zoom in a little bit more, let's have a look at the pattern, and this will help us to prepare for today. And then we're going to do the prize giveaway. So this is how we're preparing for today. S&P is usually our bread and butter trade, but you can use similar analysis for your NASDAQ as well. And what we'll do is let's hide this. We don't need that right now. Okay. And the last thing is let's have a look at what the pattern has been, and let's go into the last few days. Okay, that's better. All right, let's open it up a bit. All right, so pretty much, here we go. So if we look at, let's go back to last week, Thursday is kind of where the thing started popping off. So last week, Thursday, during the Tokyo session, pretty flat. And then into London, we moved lower and that low got bought. So that's the first time it happened. Fast forward to Friday here, a bit of consolidation. And we moved pretty much flat on Friday. That was the final trading day of January 2026. So probably a bit of profit taking, people doing some window dressing at the end of the month. We did see that large down move in gold and silver as well. That was the focus on Friday. Nobody was looking at S&P and NASDAQ on Friday because of the record moves in silver and gold. Now we look at this week. So Sunday, we had a bit of a flush out again. And then as we moved into the day, that got bought very well. Very strong buying pressure took us back up to 7,000. So this would have been Monday, was a nice sort of upward move. Tuesday, again, flush out again. So market broke to the downside. Brave buyers stepped in again. Yesterday, guess what? Broke again to the downside, and there was a little bit of buying yesterday. Now we're starting to see in the pre-market today where London traders are trying to figure out what to do. If we're looking at how have we moved here, let's see. Maybe we do this, maybe we do that on the downside, and then on the top side, it's looking like we're getting slowly we're getting lower and lower on the highs and lower on the lows. So just something to observe. Like I said, the main pattern has been London's pushing us lower and New York's pushing us back higher. And that's repeated. And a lot of trading is pattern recognition. This was a big move as well. On Tuesday, we got pushed back up in New York, and then like I said, this Wednesday move similarly again ended up moving a little bit lower than Tuesday. So let's see. I think we need to be on our P's and Q's today and prepared for anything. So I'm just gonna leave it at that, and let's get over to the prize giveaway. It's now time to announce the winner or do the draw for the prize giveaway. See how many people we got. It's got a good group of people. We got Enoch, we got Mers, we got AJ. Also entering is Akash AR as well. Let's copy these names. And then we're gonna do, there we go. Okay, so let's get the drum roll ready. And thank you everybody for joining. Thank you for entering the prize giveaway. It's been a pleasure to sort of explain my thinking process to you today. Let's do, here we go. So, all the best to everybody. Thank you everybody who has joined. Let's do the drum roll, please. All right, may the best person win. And the winner of the $5,000 CTI account is none other than Misk. Congratulations, Misk. Well done for winning. Very well done. So please make sure to post that you've won. Make sure to tag us and CTI, and you will be provided with a $5,000 account. Congratulations to you. And also thank you very much, everybody who has joined our show today. I think that's it from us. We're going to get ready for the open. Just want to say, I guess last is to thank Mir Sabir, Jackie Kumar, Khalifa, AB, Akash, Red to Green. Still, I like that name. Red to Green. And looks like Justina as well. Thank you very much for all of your comments and your thoughts and your feedback. We do continue to improve the show. Every single Thursday and Friday, we haven't missed a single show. This was our 82nd show. Tomorrow will be our 83rd show. And you've asked for us to bring on other traders. So next week, Thursday, we're bringing on an expert trader who is actually an expert in crypto. They primarily trade crypto. They also trade other assets as well. But a crypto expert, I thought, would be the perfect person to have on a time like this. So next week, Thursday, make sure you join us. We have an extra special guest that we'll be announcing in the coming days. So make sure you check that out as well. And also, just a reminder, please, if you do like the show, please take some time to subscribe and make sure that you smash the notifications button and the likes button. If you have someone that you think would benefit from this show and someone you think would enjoy what we're talking about, whether they trade gold, silver, crypto, indexes, we'll cover Forex tomorrow. We'll cover some commodities, some other commodities like oil tomorrow as well. Please feel free to share the show with them, and we'll be happy to grow the network. We're only doing these shows to help you and to provide you with information that we find useful. And a lot of it is lessons that we've learned, mistakes that we've made, and insights that we've only been able to glean from years and years and years and years of mistakes. And that's what we're trying to help you with. All right, have a wonderful day. Just a special shout out to the whole CTI family. I want to say a special thank you to Martin and also Scott and Daniel. Thank you for all that you do as well to help support the show and make this a helpful and safe community for traders. And it's really a great community, and I really enjoy everything that CTI represents. Have a wonderful day, everybody. Remember, you are trading within your risk limits. You don't have to have a $1 million trade today. Take it one day at a time, one good trade at a time. From all of us here at CTI, have a wonderful Thursday. We'll speak to you tomorrow.